Welcome back. Now, KAP has been hit by a double whammy. The financial and operational effects of the ramp-up of its capital projects has weighed on the group, navigating a challenging operating environment. The company managed a 2% lift in half-year revenue, but the uptick did not filter down to its bottom line. Headline earnings per share fell by 21% during the period. Gary Chaplin, CEO of KAP, joins us for a closer look at the performance. Gary, thanks so much for your time this afternoon. As mentioned, earnings taking a knock, and I've listed some of the challenges. And as we get started, perhaps just characterize that 6 months that was for us.
Sure. And thanks. Good afternoon. Thanks for having me on the show. So I think just from a broad perspective, a lot of positive sentiment in the economy. So the successful GNU, no load shedding, declining inflation, declining interest rates. Unfortunately, we didn't see that filtering through into our trading environment yet. We believe it will come, but it hasn't come yet. So quite a challenging environment. Really pleasing for us. You mentioned our big capital projects. So we've just finished off a major investment cycle. 2.5 billion over and above our normal capex. So really pleased that we got that finished. Our debt was stable on prior in spite of that, and we wrapped up all of those projects. So very pleased with that. That inevitably will have a short-term impact on your results. So just full costs while you're ramping up a new plant, and it's a big plant for us. And then the interest hitting the income statement where previously it was capitalized on the balance sheet. So a material impact on us. But we've achieved the ramp up, finished the projects, our balance sheet's intact, our debt is stable. So actually, in that context, quite pleased with the result for the 6 months.
And talk to me about these capital projects and when they'll start bearing fruit. You did mention that you've completed the investment cycle.
Sure. So there were 5 large projects. 4 of them are complete in and contributing fully to earnings. The largest of all of them is our PG Bison MDF facility in Kondo, in Mpumalanga. That's a big project. It's a 33% increase to our total capacity in that business. And we've given ourselves 4 years to get it up to full capacity. We can operate it at full capacity immediately. So from an efficiency and utilization perspective, we can operate it now. However, just building a market position takes time to be able to do so at margins that make sense. So we've given ourselves, in the feasibility, 4 years to achieve that.
Let's talk more about that 4-year plan, because when you do strip out those operational costs within PG Bison, you do say that you were pleased with that unit's performance. Talk to me about the plans to also enter new markets on that front.
Yeah, so our primary plan is to take market share and displace imports in our current primary markets, which is South Africa and mainly the SADC region. So we already have a fairly strong footprint in that space, and obviously to build on that footprint is our first priority. And that we generally do at wherever we can truck a product, good prices, good margins. So that's our primary market. And then to then supplement that with deep sea exports, which are generally less profitable, especially in the current environment of global commodity weakness. So we're seeing global prices weak. However, we also see that as temporary. So hopefully some of the geopolitical risks that are currently facing us dissipate, and we see the global economy starting to grow, and that will then support that investment.
Let's talk about...
I think...
You can continue?
No, I think one must bear in mind, this is a long-term investment. So it's a 40-year investment. So we also don't want to get distracted by short-term dynamics. It's a long-term investment, and we're really pleased with how it's been ramped up and our current progress to date.
You mentioned, the global economy and Feltex also under pressure due to those kind of dynamics. How much of the decline in earnings on that front would you say was due to tough trading conditions, considering that the new car sales market was downbeat? And how much of it is more due to production disruptions at some of the unit's facilities?
It was primarily two issues. Firstly, just subdued demand led to lower build, and of the seven OEMs that manufacture in this country, 6 of them were actually down during the period. So that creates a low base from which to work. And on top of that, we had a model change at one of the OEMs, which was very successful actually. However, during the 6-month period, you have kind of a ramp down of the old model, a changeover, retooling of equipment, and then the ramp up of the new model, which obviously weighs on your volumes in that period and comes with some once-off costs. So those were the primary reasons. The model changeover is behind us. That OEM is back on a 3-shift system, and it's running well. So we anticipate a much healthier second half in that business.
Gary, before I let you go, just take us through the company's outlook, right? On the macroeconomic front, it does seem like things are improving, but we do have, the Trump factor, which could weigh on growth.
Yeah, I mean, it's a really uncertain environment. There's a lot going on around the world and within South Africa. We remain very focused on our own business. We've, as I said, completed a major investment cycle. With that, we now need to get those plants generating cash and contributing to reducing debt. So that's our primary focus, is let's extract value from the investments that we've made and use that to pay down debt, which gives us balance sheet flexibility, obviously improves earnings, and gives us the ability to look at other new opportunities. And at the same time, we've got two assets which are not performing optimally. So a big focus on those two assets, which is Unitrans and Optics, and really getting those two businesses back to the level that we expect from them. So looking forward, that's our primary focus.
Okay.
We're very comfortable with the investments that we've made. I think the timing of the investments was challenging, however, very opportune. And we believe that it's really forms a foundation for good growth going forward, and we need to extract that value.
All right, Gary, thanks so much for joining us and taking us through the 6 months that was for the company. That was KAP CEO Gary Chaplin.